Hi, this is Mansi here. Today I would like to discuss the effect of earning announcement in Australia. So first we'll see the introduction. The annual earning announcement have always been important. The always been important, and we'll see the purposes behind this project is. Let's see first we find out how the announcement affect the market. An earning announcement is a public indication of company's profitability for a specified time period, usually a quarter or a year. During earning season, an earning announcement takes place on a certain date and is preceded by earning estimates by equity analysts. If a company has been profitable in the month leading up to the announcement, its stock price was normally rise until and after the news is disclosed. Second, we'll see what extent it affect the market. Earning releases are frequently taken into account when projecting the next day's open because they can have such a significant impact on the market. The goal of this study is to determine how and to what extent announcements affect the market, as well as the implications of those effects, if any. Then we'll see the motivation. The experience of worldwide monetary emergency, the post-emergency market environment and changes to administrative structures notably affect the financial area internationally. In the light of their new working sense, banks have been resurveying and changing their business techniques and models. Simultaneously, various progressed economy banking frameworks need to defy low benefit inheritance issues. In pandemic, I was really amazed to perceive how things and market have been impacted by it. Therefore, consider tracking down the impact of profit declaration on the lookout. The essential patterns have sped up and pushing a few organizations forward at record speed while for other people, headwinds have transformed into tropical storms. By pulling financial backers, convictions about the future capital business sectors are incredible signs of what could lie ahead. What's more, this view puts the new real factors we face into unmistakable help. Now we'll see the background. In background, we'll discuss some points. They are as follows. What is earning announcement? Why it is important and whom does it affects and how does it affects? Let's discuss the first one. What is earning announcement? An earning announcement is a public statement made by corporation to demonstrate its profitability during a specific time period. A profit for a quarter or a year is usually detailed in an earning announcement. Equity analyst research previous earning releases as well as other factors to produce earning forecast, guessing on what the company's earning announcement figure will be. Investors, traders, and frequently examine the company's metrics in order to speculate on its profitability. Analyst speculations frequently result in a change in the company's share price, either up or down based on expected profitability. The company's share price will shift even more dramatically after the earning announcement, rising up if profitability is high and down if profitability falls short for hypothesized or estimated level. Now we'll discuss why it is important. The earning report is the overwhelming strategy for a public corporation to report its monetary outcomes for a particular period. Financial backers can utilize an organization's income report to acquire understanding into how well an organization is run and regardless of whether the organization is performing well. However, note that profit reports frequently present a blushing image of organization's monetary circumstances. Therefore, Figure out how to perceive and translate an income report with a goal that you can isolate the supervisory crews attempt to close the deal from real world. Income declarations are significant on the grounds that they are authoritative confirmation of an organization's productivity for a given time frame. Now we'll discuss whom does it affect. So it influences everyone, primarily the organization and its financial backers, rivals, contenders, industry, economy. The data is critical for assessment since it permits the investigators to see an expensive outline for organization activities and monetary execution for the past quarter or year. Profit declarations can be compared to Amazing Marshall introducing the income season March. It is the primary undisputed verification that investigators, financial backers, and the merchant get in regards to an organization's exhibitions for the quarter or the year. Pro- Profit variance prompts the temperamental industry, prompting unsound. And the last one we'll see is how does it affects. So the day prior to the profit declaration are significant for financial backers and investigators to focus on. It is when investigators guess and give gauges that outcome in a conclusive impact on share cost, either making them start a vertical or descending pattern. The day of the income declaration, notwithstanding, is of essential significance. Assuming that the declaration is as old as investigators' appraisal or is superior to the evaluations, the organization's portion cost is probably going to climb. The better the income declaration, the higher the offer cost will rise. Now here we discuss hypothesis. The main theory is efficient market hypothesis, which is called EMH. So efficient market hypothesis has been utilized to track down the impact of income declaration as it is one of the best speculations to gauge market changes advertisement deviation. It is finished with the assistance of CAAR and AAR. The productive market speculation EMH, on the other hand, known as proficient market hypothesis, is a theory that expresses that offer cost mirror all data and predictable alpha age is inconceivable. As per the EMH, stocks consistently exchange at their reasonable worth on trades, making it incomprehensible for financial backers to buy underestimated stock or sell stock at swelled cost. Subsequently, it ought to be difficult to outflank the general market through the master stock choice or market timing. And the main way of financial backer can get more significant yield is buying more dangerous speculations. The speculations of the review outline dependent on the above destinations are H1. No abnormal returns can be acquired by exchanging stock after a declaration of political decision results. H2. The AAR CAR all through the occasions window are near nothing. The third one is H3. The normal strange returns show irregularity in event. And the last one is H4. And there is no critical distinction between the volume of exchange prior and then afterward occasion declaration. The assessed strange returns are found the middle value of the across protections to compute normal unusual returns AARS and AARS are then cumulated after some time to learn combined normal strange return CAARS. The AAR estimates are cumulated north of 61-day time frame to discover aggregate normal unusual return CAARS and expect that the CAARS ought to be near nothing. In this slide, we will discuss the methods. So, we divided our data into good news and bad news because we expected good news and bad news to have different effects on stock return performances. We use analyst forecast inaccuracy to distinguish between good and negative news. It is calculated by deducting the analyst consensus earning per share from the actual EPS for the same year. The investigation of the abnormal return within 17-day event window, the cumulative abnormal return during this window, the stock price behavior from the growth and the value stocks are three subdivisions of the analysis. The quantitative research is when a large amount of data is employed to analyze the findings. Then, over the course of 4 days, two types of samples, positive and negative EPS, are chosen, which was crucial to paper's success. And the 4 days illustrated how the profit announcement affected the AAR and CAAR. And the last one is regression analysis, which is used to determine which variable has the greatest impact on the market when it comes to earning announcement. Here we'll discuss the results. At the end of the research, it was found the market situation is highly sensitive to the earnings announcements. The market is very sensitive to the level of attention the investors have towards the announcement. Had they not been as attentive as it was found in the research, the EPS of selected sample, that is positive and negative, it would not have been affected by the announcement. The investor is highly attentive to the announcement of earnings, and based on these announcements, they decide which company stock they want to buy and sell. As soon as the announcements are made, the investors start buying and selling the stocks, which makes the negative EPS to positive and positive EPS to negative. Because as the market starts buying and selling, the EPS starts changing. Thus, when it comes to earning announcement, the most important variable that influences market sensitivity is investor attention. The more attentive the investor is, the more sensitive the market is to the earning announcement. Positive and negative EPS have played a significant role in this study to assess the effect of earning announcement. The last one will see the conclusion. In today's markets, the general timing of release rather than certain day of the week is more important. A corporation may decide to announce its earning after hours when investor attention is normally lower. During earning season, an earning release is made on a certain date and is preceded by earning estimates from equity analysts. If a company has been profitable in the months leading up to the announcement, its stock's price will normally rise until and after the news is disclosed. And we have concluded the following. The market is sensitive to the earning announcement. Hence, the company should make the earning announcement on dates which will be beneficial for the company and the industry. And the last one, because it affects the decision-making choice of the investors. Thank you. Thank you for giving me this opportunity to present this presentation.